I've been trading for over 5+ years and I've tried hundreds of different complex trading strategies. And it took me years to realize that having a boring and simplified trading approach is what ultimately led to me making consistent profits in the market. I made $92,000 last month trading, and in today's video, I'm going to share with you the exact strategy along with 3 setups that I use on a daily basis in order to achieve these results. Then I'm going to show you real examples that I took in real time. Okay, so in today's video, I'm going to share with you the simple and effective strategy that I use every single day. And as you can see, it's allowed me to make over $92,000 for the month of September using this one strategy along with the 3 setups within the strategy that I'm about to share with you in today's video. And as you can see, this is my PNL graph for the month of September from the 1st all the way to the 31st. And as you can see, I've made over $92,000. And of course, these results are not typical. This took me years of experience and losing in the markets in order to achieve results like this. First things first, let's head on to my TradeZilla stats for the month of September. And as you can see, I made $92,000 and $300. And as you can see, I had a 66% win rate, 4.3 profit factor, 83% day win percentage, along with an average win to loss ratio of 2.15. And you can see this is the graph from earlier, which is my PNL graph for the month of September. And you can see right here, this is my PNL calendar. I had a really solid month in September. As I mentioned, this was actually my biggest month of the year. I made $8,000 on week number 1, week number 2, $29,000. This happened to do with a Tesla swing towards the upside. I actually had one of my biggest losses of the year, and that comes with sizing up in the markets. So I end up losing over $13,000 in one single day, but I ended up bouncing back fairly nicely with a lot of nice trading opportunities, markets gravitating towards all-time highs, some nice swing positions, and on week number 4, $21,000. And then to end off the month fairly strong, I ended off with $16,000 to make up that $92,000 P&L. So with that being said, now let's go on to the exact strategy along with the setups that I use in order to achieve these results. So as you can see right here, most of you guys already know I trade the break and retest. This is my strategy and system. And within the break and retest, I have 3 primary setups that I use on a day-to-day basis. Number 1 being the previous day high and previous day low retest. This is one of the best retests, especially because there's a lot of volume resting above and below those old previous day highs and lows. The second is the opening range break and retest. I have plenty of videos on this using the 1, 5, or 15-minute opening range break. This is one of my favorites. Very mechanical, very simple, and very effective, especially knowing when to use it properly. And then finally, what I have here is the order block retest or the 1 candle rule retest. This is also one of my favorites as well in combination with other confluences. So all 3 of these are the setups that I use on a day-to-day basis. If I'm not taking the order block, I'm taking the previous day highs. If I'm not taking the opening range break, I'm probably taking one of the other 2. So all these setups I use in combination with the break and retest. There's no better setup than another. It's really based off of context, and that's what I'm about to share with you in today's video, along with the examples that I have at the end of the video as well. So let's first talk about the previous day high and low retest. And the previous day high and low retest is simply just marking out the previous day highs and the previous day lows. And these are going to be the key levels that we're going to be looking for a potential retest off of. And what we want to be doing is focusing on the high and low of a candle. As you can see in this case, what we have here is a chart, and we're going to mark out the high and the low of this range. This range, for example, is going to be this previous day's range. And what we're going to do is mark out the previous day high and the previous day low. The reason why we want to focus on the previous day high and low is because there's the most volume in this area. So as you can see, what we have in the markets is we have a pre-market, we have the New York market open, and the after hours. So there's 3 main sessions in the overall markets, but the main session that we want to focus on is what's called the New York market open, which happens from 9:30 a.m. Eastern Standard Time to 4 p.m. Eastern Standard Time. And the reason why we want to be focusing on this session specifically is because there's the most volume. So wherever the most volume is, we're going to draw at the high, we're going to draw at the low, and we're going to be using and focusing on these levels because there's the most volume. So the most volume, there's going to be the best trading opportunities, and markets are going to move the best around these trading levels. So that's the levels that we're going to have marked out. So as you can see right here, we have the daily chart marked out. You can mark this out on the daily time frame. You can mark this out on the 15-minute, the 30-minute, the 5-minute, the 1-minute. No no matter what time frame you're on, you can mark out the previous day highs and previous day lows. So as you can see, I have the previous day highs, also have the previous day lows marked out. So what are some scenarios that we can be looking for when trading the previous day high and previous day low retest? Number one is the continuation. This is my personal favorite. What we're going to be doing is looking for continuation above its previous day highs, retest, and then we can have continuation towards the upside, right? Similar thing to the downside here. What we have is your previous day lows. What we like to see is a break underneath your previous day lows, retest for this continue push towards the downside. So this is what's called the continuation break and retest, and this is going to occur above your previous day highs or below your previous day lows. And these are some of the best continuation trades. If you ever look on a chart and we have continuation, it's going to have to be above your previous day highs or below your previous day lows. Another scenario here is the opposite, which is the reversal, the previous day high and previous day low reject. This is something I don't look for as often, but is still in our playbook. As you can see, what's going to happen in this case, instead of having continuation, we're going to end up rejecting off this level, retesting it, and continuing back towards the downside. So this is something that can play out if we end up maybe having higher time frame retest towards the downside, or if we're bearish. And then of course, if we're bullish and we're pulling back, what we like to see is a potential reversal, which is going to be the reclaim back above that previous day low, continuation back inside this range. So this is what's called the reversal, the previous day high and previous day low reject. I personally, as I mentioned, like the continuation, but there's still nice opportunities that can occur when you're looking for the reversal setup as well. So these are the two scenarios that we can be looking for when trading the previous day high and previous day low. Now let's go into the exact steps that we're looking for when trading this setup. So first things first, what we're going to do is mark out the previous day highs and previous day lows. So as you can see right here, we're on the 5-minute chart. We have our previous day highs marked out, and we also have our previous day lows. And right here, you can see we're on the 5-minute time frame. You can do this on the 15, the 5, the 1 minute, or you can do this on the hourly, the 4-hour, or daily chart. So any single time frame, you're going to mark out the high and low of the New York session. Next step is now waiting for a break above or below the previous day high and low. So as you can see, this is the exact same example. We have our previous day high marked out, and we also have that previous day low. In this case, we're breaking above your previous day highs. So this is step number 2. So now you can see we're actually on the 1-minute time frame here, and we're breaking towards the upside. Now what we like to see is really the retest of your previous day highs for continuation back towards the upside. So now let's go on to step number 3. And step number 3 is waiting for the retest entry for confirmation higher. So as you can see right here, we have our previous day highs marked out. We have that nice push towards the upside, breaking above your previous day highs, coming back down to retest. See nice strong confirmation candle. You have a stop right underneath, and now you're looking for continuation back towards the upside. And as you can see here, this one ended up playing very nicely with a strong candle close above your previous day highs, strong confirmation candle, and then you have continuation higher above your previous day highs. So with that being said, that is the previous day high break and retest. Now let's go on to the second setup that I have. The second setup that I have in this case is what's called the opening range break and retest. And this is also another setup that we can use when we're inside of its previous day's range instead of outside of its previous day's range. And it's all based off of one single candle. So instead of focusing on the full range, so in the last example, I marked out our previous day highs. I also marked out our previous day lows. If we want to see continuation, we like to see it above our previous day highs, or in this case, below your previous day lows. What happens if we open up inside the middle of the range, right? We can't look at the high and low of the ranges if we're right in the middle. So what are we going to do? We're going to focus on the first candle of a new market session. So what we're going to do in this case is draw out the high, and we're going to draw out the low of that first candle, especially if it's inside of its previous day's range. This is exactly what we can do. So as you can see here, what we have is 3 sessions. Once again, we have the after hours, New York, and we also have the pre-market session. The main session we want to focus on here is the New York session. Why? Because there's the most volume. And as you can see here, it basically starts at 9:30 a.m. Eastern Standard Time. And as I mentioned, what we want to do is mark out that first candle at New York session open. So step number 1, what do we want to do? We want to mark out the high and low of the first 5-minute candle of New York open. So as you can see here, I mark out the high and I mark out the low, right? The 5-minute high and 5-minute low. Step number 2. Now what we want to do is wait for a 5-minute candle close above or below the first 5-minute range. So as you can see here, I have the 5-minute high, I have the 5-minute low. If you want to wait for a little bit extra confirmation, you want to see that 5-minute candle close above your 5-minute range high, or we'd like to see a 5-minute candle closure below your 5-minute range high for continuation towards the downside. So now let's go into step number 3. Step number 3 is now going into the 1-minute time frame to look for retest entries for continuation. So if our 5-minute high marked out with our 5-minute low, once we get that 5-minute candle closure above, now we're going to be looking for the retest for continuation towards the upside. So this is the exact key level that we're going to be looking for, right? Entries with stops below, and we're going to be looking for continuation higher. And as you can see here, for our entries and stops, it's fairly simple. Our entry is going to be right off our 5-minute range high, either this candle where the buyers are stepping in or waiting for the confirmation candle. Either scenario works out fine, but entries right here, stop is going to be just a break below. And what we're going to be doing is looking for a minimum of a 1 to 2 fixed risk reward towards the upside. And it's the exact same thing towards the downside, but if we're underneath that 5-minute range low. So that being said, this is our second setup, being that opening range break and retest. As always, I have plenty of individual videos going over exactly the opening range break and retest more in depth, the previous day high break and retest more in depth, along with the next setup that I'm about to share with you as well, which is the order block break and retest. So what I'm going to do here is mark out up close candles in a downtrend, and I'm going to mark out up close candles in a downtrend. So this is what's called the order block break and retest. And you can see every single setup in this case, all it uses is just one single candle. Of course, more context the better, but it all requires is just marking out one single candle in order to use the strategy and setups. So what are we going to be doing in this case? As you can see, what we're going to mark out is down close candles in an uptrend, and it's going from the highest probability order block to the lowest probability. And what we're going to do is mark out the candle high all the way to the wick. So this is going to be the highest probability for price to move towards the upside, especially if it has a wick, right? You can draw it out from the wick to the body. If the wick is very small in this case, so what we can do is mark out the wick to the bottom of the body. And this is going to be our general area for price to go towards the upside. And of course, if we don't have any wicks at all, what we can do is draw it from the body all the way to the bottom of the body. And this is our general area for continuation all the way back towards the upside. So you can see this is a much wider of a zone, whereas the highest probability has a very tight zone and it's very clear on where price has to respect for continuation higher. And of course, it is up close candles in a downtrend, and it's the exact same thing going from highest probability to lowest probability. And of course, what we want to do is mark out the bottom of the wick to the body. This is going to be our highest probability for continuation lower. If we're marking out the middle, right, the wick is very small, so we can mark out from the wick to the top of the body, right? Once price closes underneath, we like to see this be used as a retest for continuation lower. And of course, the third one is our lowest probability. What we're going to do is mark out the bottom of the body to the top of the body, and this is our general area for price to continue towards the downside. So this is what I have here, and you can see this is what it looks like on a chart. What we want to mark out is up close candles in a downtrend. So in this case, what we have is a clear downtrend in the markets. Lower highs, lower lows, right? Lower highs are being put in, and we're continuing towards the downside. In this case, what are we going to have marked out? Up close candles in a downtrend. So we're going to mark out from the wick to the body, drag this over, and as you can see, price breaks below. Once the order block closes below, that's when the order block is valid. Comes, pushes back up and towards this order block. You can see weak price action, another rejection right at this body, right? You could be looking for an entry either at the order block, right? Our entries can be right here with our stops at a break above the order block, and our targets can be all the way back down for a 1 to 2 fixed risk reward ratio towards the downside. So this is a scenario that can be played out if you're looking for continuation towards the downside for using order blocks. And this is a chart illustration. So every single up close candle we can have marked out, and you can see once price closes below, respecting price, another order block marked out here, right? Another order block marked out here. And you can see every single time price closes below an up close candle, we are now being respected and we're continuing lower towards the downside. And this is exactly how to use order blocks effectively, is when it's in a trending market. When we're consolidating, you don't want to be using order blocks because price is going to be ranging. But when we're trending, this is when price is going to respect the best. So in an uptrend, what are we going to be doing is we're going to be looking for down close candles in an uptrend. So as you can see, higher lows, right? Higher highs, higher lows, and we're having this nice push towards the upside. And what do we want to do in this case is we want to mark out down close candles in an uptrend. So you can see this is your first down close candle. You can mark it out from the wick to the body. And you can see once price closes above, comes back down to retest. You can see respects it very nicely by these lower wicks. A nice confirmation candle for a pushback towards the upside. We can be looking for entries right at our order block wick high or the body. That's where our entries can be, with stops all the way back down at this key pivot low. So this is where our stop can be. And now what we're going to be doing is looking for continuation back towards high day and above, primarily looking for a 1 to 2. And what does this look like here on a chart? What we're going to do is mark out every single down close candle. So you can see, let's mark out the first one, nice push towards the upside. Mark out the next order block, breaks above, retest, continuation higher. You can mark out more order blocks here. In this case, we can mark it out from the wick all the way to the bottom of the body. You can see price comes up, respects it fairly nicely, continuation higher. You can see how well these order blocks are respecting price, especially in a clear trend. This is very important, especially when you're drawing out order blocks. So let's go on to the step-by-step process on how to use order blocks properly. First things first, what we want to do is mark out down close candles in an uptrend. So you can see nice push towards the upside. You can see this is a down close candle here. So we can just mark out that full down close candle. If you want to mark out the wick to the body, you can. But as I mentioned, the order block is down close candle candle. So it's the full down close candle that you can have marked out. So that is the easiest and best way to mark out order blocks. What we want to do now is wait for a retest of the down close candle. So you can see price pushes higher. Now it's coming back to retest. It's tapping into the top of the order block. In this case, this is the highest probability. And so far you can see buyers are stepping in right off this order block. Next, as you can see, what we want to do is enter in on a retest looking for continuation. What we did in this case, waited for buyers to step in off this order block, right? Got in on a confirmation candle with our entry right here, stop just to break below. And now what we're looking for is continuation all the way back towards the upside. So as you can see here, this is exactly how to use order blocks. Trending market, you want to be looking for down close candles to support price back towards the upside. So now after going over all three of these setups, now let's head on to the charts to see exactly what this looks like in real time. So as you can see right here, we're on our first example, and this is going to be on Tesla. This is going to be a previous day high retest along with an order block as well. So what we're going to do is mark out our key levels. In this case, we can mark out our previous day highs and we can mark out our previous day lows. What we like to see coming into the pre-market is one of two things: break above your previous day highs for continuation, or potential break below your previous day lows for a push towards the downside. Now let's play out the tape coming into market open. So as you can see right here on Tesla, we dropped towards the downside, we gravitated higher. We actually broke above our 5-minute range, retested here. So potentially this could have been an entry for a push up in towards our previous day highs. Now, after gravitating towards our previous day highs, the next possible scenario is going to be the break above your previous day highs retest for this continued push back towards the upside. So as you can see right here, now we're having this very clear uptrend in the overall markets. We're breaking above your previous day high key level. We also have this down close candle here as well. So we have our order block. We also have our previous day highs. So what we like to see is the retest of our order block plus our previous day highs for this continued push towards the upside here on Tesla. So the levels that we can have marked out, we can actually just refine this level here as well, since we understand this is a previous day high pivot point. So let's just mark out this whole general area. And this is the exact level we like to see Tesla hold for this push higher. So as you can see right here, Tesla has that nice push towards the upside, comes back down towards our previous day highs, taps it fairly nicely. We have a strong confirmation candle here as well. This is exactly where we can go look long. And in this case, our stop loss can be at the low of the order block. And what we can do is look for a minimum of a 1 to 2 fixed risk to reward ratio back towards the upside. So now we can play out the tape. And as you can see right there, we end up having an explosive move towards the upside right off our previous day highs along with this 1-minute order block. Of course, this day did have news, but this was a textbook A+ setup here on Tesla. This was a trade that you would take 10 out of 10 times just based off of the overall context and the setup that we had intraday. So with that being said, this was a great example of the order block plus the previous day high break and retest. Now let's go on to the next example that we have for us today. Okay, so we're now on Hood. This was a textbook break and retest towards the upside above your previous day highs. Just to give us a little bit more context, we're fairly bullish here on Hood. We're building up higher lows towards the upside. Key levels that we have marked out really is this previous day high pivot point along with this 123. Higher time frame key pivot point. If we can reclaim back above your 123, in this case, this is your previous day highs, we can see a potential really big move towards the upside. So if we now go into the lower time frames, so the key levels that we can have drawn out on this case is going to be your previous day highs here on Hood. We can just mark out this general area, and this is going to be the key level that we like to see for Hood for a continuation towards the upside. Break above, retest for continuation. Now let's go into the lower time frames. So you can see right off the bat, we're having a really strong push towards the upside within the first 5 minutes. Whenever price has a really strong opening drive like this is a very good chance that price could have continuation. Just based off the strength, based off the higher time frames, you want to keep an eye on something like Hood. So this is going to be now the key level that we have marked out. We have our previous day highs. If we can now maintain above your previous day highs, we can be looking for longs above your previous day highs in this case, which is your 125. So now let's wait for a retest. So as you can see right there for Hood, price comes back down, retests our previous day highs. We have our nice confirmation candle here as well, indicating that buyers are stepping in. We can go look long. In this case, we can have a stop just to break below, and we could be looking for a fixed 1 to 2 risk reward ratio back towards the upside. Now let's enter in the trade, have our stop loss, and now we can place our take profit. Now let's play out the tape. And as you can see right there, hood, we end up having a really solid push right off our previous day highs key level. Buyer stepping in, you can see the strength that poured in here on hood. Of course, in this case, we just said we had a 1-to-2 fixed risk reward ratio. You can see this nice continuation above your previous day highs based off the higher time frames as well. So this was a great example for hood above your previous day highs. This was a very recent example here as well that you could have been looking for. Now let's go on to the last example that we have for us today. So as you can see right here, we're on Tesla. This is our final example. Just to give us a little bit more context, we're on the 1 hour chart. You can see really strong push towards the upside here. Now we're creating higher lows on the hourly chart. So we're very bullish here on the higher time frames. So of course, if you do want to see continuation, you now want to see just the breaks above our previous day highs for a potential move towards the upside. Key levels that we have marked out, really this 450. If you can break above, you can see this nice continuation higher. Now let's go on to the lower time frames. As for the key levels that we have marked out here coming to market open, we can mark out our previous day highs and we can draw out this general area here for Tesla. Of course, if you do want to see continuation, as I mentioned, above your 445 hold for this push towards the upside. Now let's go on to the lower time frames. Let's play at the tape. So as you can see right here, Tesla rejected off your previous day highs right off the bat, but now you can see really strong reclaim back above your previous day highs. And I can see the displacement coming in, a lot of buyers stepping in above your previous day highs. What I personally like to see on Tesla is now really the retest of your previous day highs along with this 5-minute range. So this is going to be my general area for Tesla for this continuation higher. Now what we can actually do is refine our levels. So what we have here is our previous day highs. We also have this 5-minute range. So we can actually move this so it touches the top of the 5-minute range and we can extend it down in towards that previous day highs. So this is going to be the exact level that we have for Tesla for continuation towards the upside. We have our 5-minute range high plus we have our previous day highs. So this is multiple confluences for a continuation higher. Now let's see if we can get that retest here on Tesla. So as you can see right here, Tesla came right back down in towards our previous day highs along with this 5-minute range. Buyers are stepping in here now as well. What we can be doing is going long with a stop loss just to break below, and we can be looking for a continuation back towards the upside. Now let's play out the tape. And as you can see right there on Tesla, we end up having a super solid push towards the upside. Never close underneath your previous day highs. So you maintain above your previous day highs, and you can see Tesla took a little bit longer, but maintained above key levels. And you can see on the 5-minute time frame here as well, super nice hold right above your previous day highs. You end up having super solid targets back towards the upside, which was 450 and above. As you can see right there, perfectly held the key levels, 5-minute range plus your previous day highs in combination with one another. So with that being said, I hope you guys enjoyed the video of the 3 setups that I use on a daily basis. If you did, I'd appreciate if you guys drop me a like and sub. With that being said, I'll see you guys next week for a brand new video. Peace.